Okay, it's been a long day, so I'm going to talk about something totally different than what's been talked to so far. So we've talked a lot about iPhones and apps and Android and all this stuff, and I'm going to talk about the whole other side of the pyramid, the base of the pyramid. I've spent about 10 years living in Latin America. 2 of my kids were born there. My wife is from there. And when we got into the mobile payments business, one of the key things I asked myself is, well, why? Why would anybody use mobile payments? So what I want to talk about today is kind of what we've done and the thought process we went through in our mobile money transfer service, and then the results that came out the other side. And where we basically started was, why? Why would anybody use mobile payments? My guess is everybody in this room has a credit card, and I bet you it works pretty well. I bet you it works every time you swipe it pretty much. So to me, if you look at the cases for mobile payments, the one big one that everybody likes to cite is M-Pesa in Africa. But if you look at the reason that worked, it's because the people are unbanked. They have no financial services. And contrary to public belief, a lot of the people who are unbanked, and this is not against anybody who is a banker in this room, they don't want to be banked. They don't want to have a bank account. They're not dying to have a credit card. They're very happy the way they are. They exist in a cash economy. And so if you look at the United States and you look at the immigrant population, which is basically what we deal with mostly, 10% of the folks are immigrants in the United States, majority from Latin America, and 66% of those guys are totally unbanked. Again, I'm not talking about underbanked. I'm talking they have no banking account. They have no credit card. They take the cash after they get it. They go to a check cashing store, convert their check into cash, and they hide it under the covers or under the mattress. That's the economy that I'm talking about. So if you look at these consumers overall, they're kind of operating in a different world than we are, basically, right? But they do have one financial need, and that need is to move the money from the United States to where their family members are. Because generally these folks are paying all the expenses related with their family members back home, and that's the reason the remittance model exists. And so if you look at the business of money transfers and remittances, you'll see that on both sides of the border, the people are unbanked. So that means the guy up here, he's working, he's getting cash, but then he's giving it to somebody on the other side of the border who also doesn't have a bank account and doesn't want to have a bank account, and they operate in a cash economy. So for many people, when I speak at conferences about mobile payments, this is kind of like a different world. And you can see it here. If you go back, the guy washing the dishes, he operates in this world. The guy probably cutting your lawn, not the guy who's running the show, the guy who's actually cutting it, he probably lives in this world too. So it's a very different world, but it's a very, very large world. So remittances, and these are the remittances that are actually going through formal channels, are about $330 billion a year. If you start to go through informal channels, meaning I give it to a guy called a viajero, who's a guy who jumps on the plane and goes back and forth from Mexico or Central America a lot with cash in his pockets and pays the people out on the other side, these numbers get much bigger. And if you look at the Latin Americans, which is where we operate towards the U.S. Hispanic market, 60% of the people from Latin America immigrants send money home. So it's a big number. They also tend to send it a lot of times, once a month, and they average about $320. And so as you guys probably know, has anybody here ever sent a money transfer? You have? Okay, so more people than I would have thought. And how was the experience? Was it great? Was it a perfect experience, or was it kind of a hassle? Expensive? Miserable. Okay. So this is a big business, and Western Union and MoneyGram and a lot of others have been in this business for a long time. And so you'd say, well, it's a huge market opportunity, right? And so you'd say, it must be, because it hasn't changed much since its inception. It's a little bit faster, it's a little bit cheaper, but at the end of the day, it's the same thing. So you'd think there's one of two things going on. One is the service being delivered is perfect to the consumer's needs. It's exactly what they want. And that's what you would assume, but if you actually ask consumers, okay, you're doing this every month, you're sending $300, you're paying a lot of money, is that really what you want? If you ask the actual guys doing it, they'll tell you, no, that isn't what they want. They're forced to send $320 a month because it's the only way it comes out economically for them. It's the only way the fees don't kill them. So if you sit back and say, well, listen, what would you like to do? They say, well, listen, what really happens, I send $320 down to my mom in Mexico, and it doesn't just go to her and then she spends it. It goes with very specific instructions. So mom, here's $320. I need you to pay your electricity bill so the lights are still on in the house. I want you to spend $10 on your phone so me and you can still talk to each other. And then I know it's Pedro's birthday, so give him $20 so he can go out and have a piñata at Burger King. So that's the real way this money is being sent. It's being sent with instructions. But the consumer can't do that. And so he's up on this side of the border. Many times he can't go down to see what's going on, and so he has no control over the money. So it's actually one of the largest industries I can think of that's been around a long time, multi-billion-dollar business, but it's actually not delivering the service the consumer wants. So if you look at the other part of the puzzle, so if you want to use mobile payments to kind of make this thing a little different and put it together in a format that consumers like, the people have to have phones. And so if you look at wireless penetration in Latin America, it's over 100%. Many people have multiple phones. One of the key things, too, when we look at this demographic is our phones, our guys who use our service have bar phones. Does anybody remember about bar phones, right? They don't do anything. They just receive text, and you can talk. That's basically it. So the majority of our consumers are still with bar phones. But the fact of the matter is, in Latin America, and we use our service via SMS. I'll talk a little bit how we do it. But using SMS, here in the United States, if I send an SMS to you, I'm going to get charged, but you also received it, you're going to get charged, right? So if you're dealing with the base of the pyramid, a lot of our folks don't have any balance on their account. It's a prepaid account. They don't want to receive SMS messages if they haven't paid for them. So it's kind of a different dynamic. But in Latin America, it operates under a calling party pays model, meaning you can have a phone, and in Latin America, you can go get a phone for about $10, and you can use up all the balance on the phone, and you have a zero balance. But I can still call you, and I can still send you SMS messages. So this is something fundamentally different with how that region operates, and it's kind of part of the raw materials that make mobile payments stick and work in the region. Again, I can have a phone. I have no balance on the phone because I don't have the money to put $1 on it, but yet I can still receive inbound text messages or calls. So what this meant to us was this is kind of the perfect market for disruption using mobile phones. Because again, I think a lot of stuff is really cool with mobile phones, but again, we're in the business to make money. And to make a lot of money, it's always been my experience, there has to be a lot of pain. And so looking around, and again, if you look at M-Pesa, it's a place, there was a lot of pain. That's the reason people adopted it. Not because it was cool, it is a little cool, but the end of the reason people adopt things is because this is simply a better way for me to conduct some aspect of my life. And it's an aspect where there's pain. And that's why I think mobile money transfer is starting to, and you'll see a lot of growth with this in the future. So we basically took the approach of saying, well, let's go and look at the way it's done now, and let's just give the consumer basically what they want. So we let consumers use their mobile phone to spend small amounts, what we call micro remesa, or micro money transfers, of anywhere from $5 to $50 instantly using their phone. Furthermore, they can then direct it to specific usage. So consumers here who send money home, most of them don't have their papers in order to go back and forth across the border. So if you look at folks who've been up here 5 years, and every month they're sending $300 home and giving specific instructions, many, many times those instructions are not being carried out. And I can give you real-world examples. In El Salvador, Guatemala, there's a guy who's working up here really hard, sending money to his brother to be paying to build a house and a little lot he has back home. And then he decides, okay, well, I got enough money, I can go back home and kind of retire and live the good life. And he goes back down, and guess what? There's no house. They never bought the cement, they never had, because they used the money for other purposes. And that's the real world. So the ability for consumers up here to be able to do transactions as they like, smaller, instant, and controlled, is very, very compelling. And we've seen this in what we do. So our system is pretty simple. They go in, again, it's all cash. There's no credit cards. We have stores in the United States that are affiliated with Regalo card. The guy walks in and basically says he wants to do a transaction. He provides his cell phone number in the United States, and that kind of creates like a virtual account for him, for lack of a better word. And then he tells us what he wants to do and where he wants to send the value in Latin America by providing the name and cell phone of the person in the country. We then go and we hit, okay, transact. We do a couple things happen. So depending on the type of transaction, the first thing we do is look to see if the numbers are valid, like if they're real phones. So we look in Latin America through a database, make sure that phone is actually a cell phone. It can receive an SMS. If it is, great, it can go through. The other thing we do, depending on the transaction, is go through KYC and OFAC and other things to make sure there's no kind of nefarious uses of these monies. If that's all good, the consumer right there gets a confirmation code that comes out on his account. And so he gets it from the cashier here in the United States. And this isn't like bodeguitas, that's what we call them, like little small ethnic markets is where this is going on. So with that confirmation code, it's done. He receives an SMS in the United States saying, hey, you just did this transaction, let's say to pay a bill in Mexico for the electricity. And at the same time that that happens, our gateway locally in the country sends out an SMS to the person saying, hey, listen, Pedro just gave you $10 to settle with the electricity company. We'll inform you when it's complete. We then have the system built in to do several things, which I'll talk about, to actually conduct and finish these transactions. So it's an easy and simple way for folks to be paying for specific goods and services and being sure that they're delivered as they want instantly. The other thing we can do is we work, if you look at the money transfer business the way it works now, if you go to pick up money in a foreign country, 99% of the time you're going to go to a bank. Anybody know why that is? At least in Latin America, that's the only place that has enough security inherent in their business model, they can do it. Because if I have to be paying, there's $26 billion a year to Mexico, there's $10 billion a year to Central America. So to be handing out all these billions of dollars, the only guy who has that in his business costs already is a local bank. Because in El Salvador or these places, when you have the money, people are going to rob you. And so from a consumer's perspective, it's kind of dangerous going to the bank. So if you go to the bank, and people know, because many of these countries, they know who's getting money from the States, they go to the bank, they pick up the money, there's almost always somebody waiting to relieve you of that money the minute you leave the bank. With our system, because we're doing smaller instant amounts, it's much more user-friendly, and the majority of the places that consumers go to either buy products or use the cash are merchants. And so this is what ties in a little bit with a lot of what was discussed here, is so the merchant, what is the value of a merchant participating? Well, a merchant can give out $5 to $50, and he likes the fact that in an economy that's pretty tough, I can get a channel of clients coming in with cash, and I also make a little money when I give the cash out. So it kind of is the glue that holds the model together that makes it just kind of very different from Western Union or the traditional model. The consumer can do three basic things with us. One is what we call Regalo card, for lack of a better word. This is sending value that's directed to a specific purpose. So you can send, here's $10, I want it to go to Claro in Guatemala. We are directly interconnected with these telecommunications carriers, and we actually just put the money straight onto the client's account. Or it could be, hey, I need pharmacy goods because my mom's sick. You can send down $10. They can then go to a participating pharmacy, and they show up with the PIN code they get in their SMS. They enter it into a system, and the goods and services are delivered. So basically, it's money for goods and services on the other end. The second area is money for paying the bills. Here we go directly to the biller, so we pay it directly. The person no longer has to get a money transfer, pick up the money, then go to the electric company, pay the bill. All we're allowing the consumer up here to do is say, I just want to pay my mom's electricity bill. And we directly do that transaction for them from up here. And it basically, where you look at majority, you can pay all sorts of things, but really where all the money is in water, electricity, et cetera, the basic services, because folks want to make sure that the water's running in their house, that the electricity is working, et cetera. And then the last portion of what we do is what we call Regalo cash, and this is the ability, again, to get small amounts of money, $5 to $50, from different merchants. So from the consumer's perspective, it has a lot of benefits because instead of going here in the States, saving up until you get $300, walking down to where Western Union or whoever it is, and sending it off because it's the most cost-effective way, you have to send that amount of money. They prefer to go in, and as they're doing normal transactions, topping up their Boost phone or doing other activities, just say, hey, here's $10, send it to mom. Gets there instantly because we use SMS. She can then go pick it up at local merchants she already knows and that are open more hours and more easily accessible to her. And so it's just a different business model overall. So the customer gets, the customer in this scenario, and what we've seen is, it's not much rocket science. It's a huge industry where the incumbents just weren't giving consumers what they want. And mobile phones just happen to be the ideal vehicle to deliver to them what they want. And so now they have an easy, instant, flexible, controlled, and trusted experience doing small amounts of transactions on a daily basis, kind of the way they want. And so when you've done this, we've been doing it, we built the technology platform ourselves, but we've been transacting maybe 8 months. We have about 100,000 paying customers. The average transaction, the average customer, 32% do 3 or more transactions a month. And so it's very clear that when you give the consumer something they want, and I think the mobile device here for us is the tool that enables this to happen, and there's true pain in the market. So again, the people don't like the money transfer companies. And so I think what they're seeing is these small ways to do small and quick transfers of money is the future. And I think by looking and focusing in on where is the sweet spot in mobile payments, you can actually have something that grows pretty quick and makes you money. And so I think that looking at this, our experience has been, and it seems to be echoed a little bit throughout the world, is the unbanked consumer seems to be a very good demographic for this opportunity, for mobile payments specifically. Because one, they have the mobile phone. Two, they don't like the bank and aren't using them anyways. So it's pretty easy to offer them something, if it's compelling, to adopt, to start to conduct and get them into the financial ecosystem. I think this also will probably become eventually an on-ramp, and we can see it with banks that we deal with in country, into a more traditional financial system. But I think they've realized that there's a large percentage of the population, both here, sending the money, and certainly down south, receiving the money, that just are totally unbanked and really don't want to be. So to sum up, I think the massive adoption that everybody's always looking for, and I know people talked about NFC, whether it's here or there, and a lot of folks mentioned there's a lot of things that are out looking for solutions, looking for problems. I think that, again, if you focus, like any business, on true pain of the consumer and can deliver something that's more competitive, meets their needs better, lower price, et cetera, I think that you'll see rapid traction. And then the other thing I think is the mobile payments off all the different things we heard today is going to be very disruptive, at least specifically in the money transfer space. I think a lot of the incumbents in money transfer are going to die the death of 1,000 cuts. And it's interesting because we've met with most of the large folks, and at the beginning it's like, well, it doesn't really matter. It's one little thing. It's them sending the communications down. I don't really care. That's a little bit. Okay, so that's fine. We'll take that cut. And it's, well, the pharmacy, you're going to go show up there. But how many people really go to the pharmacy? Okay, we'll take that cut as well. Oh, it's the bill pay. They're just going and getting the electricity there. That's okay. We'll take that too. And so I think that what we're going to see is the consumer and mobile payments, and we can see this somewhat in the United States, quick, easy, efficient, fast transactions are always going to win over a model that says, listen, this doesn't make any economic sense unless you bring me $300 and I'm going to charge you a lot of money. And by the way, you're going to have no control over what happens with the cash afterwards. So I think we're going to see in Latin America specifically that this is going to be a leapfrog moment, just like happened in cellular there. That folks are rapidly going to move away from the traditional manners of sending money, simply because it doesn't meet their needs, to mobile payments and other options out in the marketplace. Okay, that's it. Any questions? No, good question. Yeah, we follow the exact same things. So we go, these transactions that are cash-based, they have to go, and it's the same as the money. Legally, you don't have to do a lot of things. If it's under $2,000, that's going to change. But we basically took the approach that everything needs to be regulated. It all goes through MSB filters, et cetera. So us sending $50 goes through the same process if you sent $5,000. There is no difference. We partner with a person who has MSB licenses in all 50 states, and we basically get the transaction, run it to their compliance engine. It comes back with send, hold, go, and send, hold, stop, and then we execute the transaction. But yes, so it passes through that, just as you would Western Union or any other money transfer company.
So how do you keep your costs down for money being into the system? I was going to say, how do you avoid those additional fees? And it might be a couple percentage or a dollar here and there, so you can charge a low cost.
So when we initially started, and this changed over time, but our model, if you saw, we're using merchants, right? So no banks, merchants. And so we have basically deals kind of negotiated behind the scenes with the merchants that says, okay, when a guy comes in with Regalo card and spends $10, we're going to pay you $9. And so the sales pitch to the merchant locally is basically this simple. The salesman goes in there and says, hey, do you know $10 billion comes a year from the United States, from the U.S. to here? Guy goes, yeah. Wouldn't it be great if they came in here and you had those customers for no cost in your store? Yeah, great, but I don't know how to do it. Well, we'll take care of doing the whole thing, marketing the United States, the technology, the glue that holds it together, and all you need to do is basically give us a discount. And they're like, well, what discount? We say, well, you have a wholesale discount structure, don't you? So if somebody buys a real lot of your goods and services, you have a discount? Yeah. Just give us that discount. And then we're generally set up in their system like another form of payment, like a Visa, MasterCard, American Express. And so that's how we get some of our model. But one of the things that we learned, which was fascinating, was, so initially when we first did the initial tests, it was free. You could send $10 and get $10. But the consumer liked it enough that the stores selling the service said, you guys are dumb. You're giving away something for free that you can charge for. So we started to charge. And so we charge from, it depends on the amount, but it goes anywhere from, for $5.99 up to $50 is $3.69. So if you look at it, it's still much cheaper than Western Union, even though on a percentage basis it may not be, because the consumer is not sensitive to about $1 or under $1. They just don't care. But they're willing to pay extra for that. They like that convenience, the ability to do small, immediate transactions. So it's something we learned along the way. Yes?
Who are the Regalo agents? So what does the Regalo agent look like in North America? Is it Best Buy? Is it?
No.
So what is the Regalo agent?
Yeah, so in the U.S. and the folks who actually the consumers come into, no big box retailers, none of that. No, we're way, way down further. So like Metro PCS, I don't know if you've ever heard of Metro PCS, so we're in a lot of their agents. It's in smaller, very specific locations. A lot of them already do money transfer. They do prepaid, they sell a lot of prepaid cell phones. Again, it's kind of dealing a lot of prepaid communications products, calling cards, et cetera. This is basically the market that we address. We address it through two forms. We have both folks who have APIs built into our system. The Metro PCS agents is an example of that. And then we have a direct like ISO sales force that goes and gets like kind of the mom and pop bodegas. And so our thought was, because we actually had the opportunity to do something with a bigger box store, and we told them no, because we feel that you have to grow this at the grassroots. And then once you get enough going there, then okay, but they already have to know all about it, be educated, have done a transaction before they go to a bigger box retailer.
So how does that work then? If I go to Metro PCS and I want to send $10 to my brother in Guadalajara, and they want to spend it at that pharmacy with the actual mechanic, I go to the sales associate at Metro PCS,
So,
say I want to send $10 to my brother in Guadalajara.
So in our system, and it kind of depends. It depends which of the three products. It works a little bit different. But the general structure is saying, I want to send a pharmacy to Guatemala, let's say. So Makos is the biggest pharmacy in Guatemala. So a guy goes in there. He has a choice where it could either be used in anywhere in the Regalo card network. It's like so there, or Burger King, or all these other places, or just the pharmacy. So if he says just the pharmacy, the flow follows the same. He comes in, gives his name and cell phone number. He gives the cell phone number, the name of the person he wants to go to. In this case, he would choose Mako, or the pharmacy for $20, click send, and it follows the same process. The person down there gets a PIN code delivered saying, Pedro just sent you $20 to use at Makos. He then just can go to any one of the stores in the country, and he goes, buys his stuff. When he gets there, in the POS system, they ask for his cell phone number, puts in the PIN, and it's authorized or denied.
How does the end user in the United States know who's on the network in Latin America?
We're agnostic, so we have our own SMS gateways, and it works with every phone.
No, not through the phone, to know that that pharmacy in Latin America is a participating Regalo.
Okay, so
How do you know it's an end user in the United States? What place I can
yeah, so he'd learn that either through the system or POS material available in the store in the United States, and then in country, there's little stickers that say we accept Regalo card, think of kind of like Visa, on the locations of all these places, so the person down there can kind of identify it as well.
Earlier you mentioned that bank is not involved. Merchants, when they do a payout, do they still, you still send the money directly to the bank? For example, like Mexico, to the merchant?
Yeah, so it goes, I mean, we run, like every other payment company in the world, run off the bank channels. The difference is kind of the format it goes to. So the merchants, basically, we settle with the merchants in country, in their bank account, and we do it generally, it depends on the merchant, but usually we have terms with the merchant too. So some people have 30 days, 37, so every month we cut it and give them 7 days later. Some folks, it's like when a trigger comes and you hit $100,000, you pay it. It depends. Okay.
Thank you very much.
Thank you very much.